Good morning, traders. Welcome to another round of Technical Talk with me, Aaron Hill. Today is Friday, the 19th of November, and time is now 8:16 a.m. GMT. In terms of, in terms of markets, European equity indexes are higher across the board. The FTSE 100 is currently up by 0.3%. The DAX up by 0.2%, and the CAC up by 0.4%. This takes the lead from Asian equity indexes. The Nikkei, Japan's Nikkei 225 was up 0.5%. The South Korea's KOSPI added 0.8%, and the Australia's ASX 200 climbed 0.2%. In terms of US equity index futures, we are also higher across the board. The Dow Jones 30 futures are up 4%. The same for the S&P 500 futures, 4%, and also NASDAQ, the NASDAQ 100 futures. All right, in terms of economic indicators, we have already had UK retail sales for month over month, and that came in positive at 0.8% against the expected 0.5%. Now, there was very minimal reaction on the pound dollar, so it was largely overlooked, I believe. Coming up at 8:30 in 10 minutes, 8:30 a.m., we have ECB President Lagarde speaking. At 1:30 p.m., we have Canada core retail sales month over month, also the core retail sales number. And later on in the session, we have a number of FOMC members speaking. So in terms of technical charts, as you can see on the screen, I'm currently looking at the euro dollar, and this is the weekly time frame. As you can see, we have connected with notable support, Fibonacci support, consisting of the 61.8% Fibonacci retracement at 1281 and a 1.618% Fibonacci projection at 1237. Now, for any harmonic traders watching, they will note that this is also an AB equals CD alternate pattern coined by, I believe, Scott Carney. This is the 1.618% ratio at, again, 1236. So as you can see, we are rebounding from this area. Continued upside from this point could lead to retesting the resistance area at 1473, 1583. So do keep this in mind for any trades taken on the euro dollar. Moving over to the Aussie dollar, we are currently testing an interesting support. This is the daily time frame here. Between a Quasimodo support at 72.20 and a 61.8% Fibonacci retracement at 72.71. Now, interestingly, what the upper edge of the prime support on the weekly time frame at 72.42 rests within this area. We also have H4 Quasimodo support at on this chart here at 72.50, also resting within this area. So this daily support boasts reasonably strong confluence as well. Also, for anyone that was short this resistance on the daily time frame between 76.21, 75.51, held the 100% Fibonacci projection at 75.51. Now, again, for anyone that follows harmonics, we'll note that this is an AB equals CD equivalent structure. And with that, again, taking reference from Scott Carney, the traditional take profit targets are 38.2% and 61.8% Fibonacci retracement ratios taken from legs A to D. As you can see, we are testing the final take profit target within that structure. So do keep this in mind. This daily support area between 72.20, 72.71. And with that, on the H4 time frame, as you can see, we did form a half-hearted hammer candle off of the Quasimodo support at 72.50 yesterday, I believe. Yesterday, yes. If we come above the 73 handle on the H1 time frame, this adds weight to a bullish scenario, possibly targeting supply at 73.58, 73.49 on the H1 timeframe. Now, across on the dollar yen, for anyone that follows my regular market analysis will note that I highlighted a potential bullish flag here. We did get a break earlier in the week, but has pulled back from best levels. It was on track to form a shooting star, but now it's a bit on the sidelines right now. If we do take out this resistance and also the upper edge of the bullish flag, sorry, the resistance comes in at 114.38. If we do take out this resistance, do keep an eye on the 1.272% Fibonacci projection at 116.10. Going against the current picture on the weekly time frame, of course, we have the daily time frame recently forming a bearish outside reversal. Now, this is different from a bearish engulfing candle. A bearish outside reversal takes into account the entire range of the preceding candle. As you can see, we did form a bearish outside reversal from a 78 this is a 78.6% Fibonacci retracement, and that comes in around the 114.90, yeah, 114.99-ish area. Continued downside does have supply turn demand in view at 112.66, 112.07. Now, with that on the H4 time frame, we did have a reaction from resistance yesterday at 114.46. Continued downside, continued selling from this point could lead us into a prime support area. Coming in at 113.28, 113.59. Now, interestingly, this prime support holds a 100% Fibonacci projection. Again, an AB equals CD scenario at 113.44, and also a 61.8% Fibonacci retracement at 113.60. So do keep an eye on this area should this resistance hold for a potential bounce higher. Quickly moving over to the pound, not much to really go on. For traders who read my daily market analysis will note that I highlighted the possibility of a whipsaw above the 135 handle on the H1 time frame. Now, all this came down to was above this resistance. We had not only a H1 Quasimodo resistance at 135.17, but this level was set within a H4 Fibonacci arrangement between 35.24 and 35.10. As you can see, we are testing this area as we speak. Interestingly, we did form a shooting star candle off of this the H4 shooting star candle off of the H4 Fibonacci resistance yesterday, and as you can see, we did whipsaw above this, taking out likely a number of buy stops, which is this formation here on the H1 is commonly termed bull trap, and we did push lower only for a short-term move, of course, because if you remember on the daily time frame we are above support at 34.49. Now, if we do come across, as we have already tested the H4 resistance, there is still a chance the Quasimodo resistance on the H1 could generate a reaction if tested. Alternatively, if we do break the 35.17 level on the H1 in line with the daily timeframes picture, we could potentially be in the setting the stage for a potential run to Quasimodo resistance at 35.80, closely shadowed by the 136 handle. This is on the H1 timeframe. Now, just really quickly on the Dixie, the dollar index, we are coming off resistance between 96.37, 95.80. We did form a bearish shooting star pattern from this area on Wednesday, and did continue lower on Thursday. However, in recent trading, as you can see, we are higher by around 0.3%. So whether we make it back to support at 94.65 is difficult to anticipate at this time. Now, in terms of the cryptos, we did see Litecoin against the dollar drop considerably from an a combination of Fibonacci structure, which is composed of a 61.8%. Let me just enlarge this screen. A 61.8% Fibonacci retracement at 294, a 100% Fibonacci projection at 274, and a 1.618% BC Fibonacci extension at 297. Now combined, as you can see, we have seen a nice drop from this area. Again, the 100% Fibonacci projection is it represents the AB equals CD pattern, bearish pattern. And finally, onto the gold market. We've not really seen much since our last technical talk, but it is worth remembering we do have a Gartley pattern forming on the daily time frame of gold. We have seen sellers show interest in this area. This is something to certainly keep an eye on. If we do manage to get a decisive reaction from this point, again, let me just highlight the values. It's between 1878 and 1863 is the potential reversal zone, or PRZ. If we do get have a reaction from this downside reaction, do keep an eye on the 38.2% and the 61.8% Fibonacci retracement ratios. As you can see, as mentioned a few minutes ago, let me just redraw that. These form the traditional take profit targets from within a Gartley pattern, or an ABC, an equivalent AB equals CD formation. As you can see, the 38.2% comes in bang on the 1800 figure, and the 61.8% comes in around 1753. So do keep an eye on this structure as we go forward. Now that's it from me today. Have a wonderful weekend, trade safe, and I'll catch you on Monday. Thank you very much.